Hello everyone. Welcome to today's webinar on Odoo 15 accounting module. I hope everyone can hear my voice. If you are not able to, please let me know. You can add in chats. So today's agenda behind this webinar is to literate the end users and the public with Odoo 15 accounting module. So here I'm focusing on accounting module. So before getting to it, let me give a quick intro about myself and about my company. So my name is Shabna, functional consultant. And about my company, the Cybrosys technology is one of the fastest growing company in Odoo, which providing business solutions in our global market. And we provides all type of Odoo ERP services, including ERP implementation, customization, support and maintenance, Odoo migration, Odoo integration, Odoo apps development, and employee outsourcing services in Odoo. And we have covered almost in all industries. Now the basic question, why Odoo ERP, even though there are a lot of ERPs available in market? The answer is simple. Just Odoo is simple, integrated, and user-friendly. That's why Odoo has 7 million users around the world. So moreover, Odoo is in full-fledged, high-quality ERP at reasonable price and having 34,000 plus ready-to-use custom modules. And also, I'm glad to see that our team had contributed 450 plus custom modules to Odoo community. Now let's go to the benefits of Odoo accounting module. So as I said, Odoo is simple, integrated, and user-friendly. Every user will love the beautiful interface, and it is so easy to set up and learn. So there is no need to create invoices manually always and print and send them, register to bank statements, etc. That can be automated, and this saves a lot of data entry time. So regarding account payables and receivables, Odoo can manage both the account payables and receivables. That is, we can compare the information on the purchase order, vendor bill, and the receipt, and we can make sure that the amount that is that we need to pay the correct bill. And Odoo automate vendor bill creation with artificial intelligence. So the scanned PDF or image format files can be uploaded and converted to digital files easily. And next is regarding payment bills and bank and cash registers. So the Odoo can manage the supplier bills to pay in checks, and the payments can deposit as batch to ease the reconciliation process. Also, it can synchronize directly with your bank institution to get all the bank statements imported automatically into your database. So with the advent of 15, that is Odoo 15, version 15, more than 20,000 plus institutions around the world are supported. So you can that is, you can import the statements automatically from your bank. And also, don't worry if the banks are not supported, you can also import statements using IFX or QFS CSV files. Then the smarter reconciliation tools, which means with the advent of 15, like the Odoo modules Odoo matches the 95% of invoices and payments automatically, and the smart matching tools allows to do the remaining 5% reconciliation. And next is advanced access rights. So access rights to accounting can be configured to internal users, that is to employees at different levels like billing staff or accountant or as a consolidator likewise. And Odoo supports the multi-currency so that multi-currency transactions can be done. based on the customer location, and the transactions can be recorded in different journal as a mode of operation. And also multi-company and multi-user scenarios are managed by Odoo. And the most important part, that is the legal statements. So we will have the profit and loss report, cash flow statements, balance sheets, general ledgers, tax reports, aged receivable and payable reports, etc. And all the US GAAP reports will be there. And in addition to that, based on the localization package, some country specific statements will also be there. And company assets, deferred revenue or deferred expense, and their depreciation boards that can be track and automate with models. That is, we can use models to automate this asset management or deferred revenue management in just few clicks. Also, the budget management, which enables to track and compare actual performance with different budget. So now let's get into the live demo. So let's go to accounting module. So before getting to the operation, let us see what are the basic configuration and how we configure the chart of accounts, taxes, journals, physical position, etc. that are required for a company operation. So all these things like taxes, chart of accounts, all this depend on our company country, which means the localization. So in multi-company scenario, like if companies are at different locations, say different countries, the finance management are entirely different, and the taxes and physical positions also different. So for each company, we have to set a localization package. So for now, I'm in your company, and here you will have a new company, that is demo company. So from the overview, you can see you can't find any journals over here, because when I go to the chart of accounts, so there is no chart of accounts or taxes. So because for this company, I haven't created or I haven't added any localization package. So let me show you how the localization package is setting from configuration setting. Okay, here we'll have a section that is physical localization, where you can add the package. Okay, so from the drop down, you can choose the package, or from more install options, here you can find all the localization packages that are provided by Odoo for different countries. So based on your company's need, you can add you can install the localization package, and you can add it over here. So for now, I'm adding the one of the package that I have already installed. Let's save this, and after saving, let me check the chart of accounts. Okay, so here you can see all the pre-configured chart of accounts and taxes that are installed. So as based on the localization package we have installed. Now moving to my company. Okay, so next is the chart of accounts. We'll move to the basic configuration. We'll start from chart of accounts. So as we know, that is chart of account is a list of accounts that are used for the financial transactions in the general ledger of our company. And they are listed in the order, that is when I'm choosing this type. So here you can see the different account types. So these are listed in the order of appearance that are in the physical, sort of in the financial report. So basically in balance sheet and P&L report. So under the balance sheet, you will have the asset type, then liability and equity, and the account types that come under this nature that you can find here. Similarly, under profit and loss, you can find the income and expense and the account that come under this nature. So there is no need to use this thing, that is the start of account itself, you can use your own company specific. So that what you can do is that either you can import the chart of accounts from the import option under the fabric. And what I'm doing is right now I'm uploading one of the file. So from okay, so before that, let me show you that. Okay, so this is a code for the chart of account name and its type and the company name. So I can create an Excel sheet, the data, and I can import. So I'm first testing this. So right now it shows that there is an error, which means that this type expense is not visible. It's not taken correctly. So when I'm checking this in the chart of accounts, it is actually provided as expenses. So while you're importing your data, you have to check that all the things you have entered in the sheet is correct or not. Okay. Again, I'm importing the same file. I'm testing. So it seems valid. So I can import. Okay. So here you can see 11 records are imported. So let me check one of the account, that is for this one, deferred income. Okay. So the deferred income, deferred expense as the records I have entered in the sheet that will be imported to a system. And when you click over here, that is in the setup option, you will get more options. Like here it is the code and deferred expenses, which is a account name, and you can add the account type, which is a current asset. You can also add default taxes for the account tags and allow journal, so that the entries from this journals will only be affected in this account. And also you can set the currency for account, and if this account is allow, that is it is involved in the reconciliation process, you can enable the allow reconciliation. And one more option is the that is deprecated. So deprecator means if you want to delete one of the account after whenever an entry had added, it is not possible. So what you have to do is that just deprecate the account so that no longer it will be used. And also you can create manually from here. Just click on the create button so that you can add the code, account name, type, and all. Okay. So next is the taxes. Okay, so here you can find all the sales tax and purchase tax that are already in the database. So let's create one. Just click on the create option. And here you can add the tax name, for example, tax 10%. And here you can find the tax computation. So the tax computation can be either percentage of price or percentage of price included or fixed or group of taxes. So if it is percentage of price, you have to mention how much percentage, and you can add the tax type, which is a sales tax or purchase tax, and the scope, whether it is applied on goods or services, that you can also add as a scope of the taxes. And under definition, here you can find the distribution of invoice and credit notes. And over here, I can add the tax account, that is tax payable. Okay, so when a tax is applied on any of the sale or purchase, basically this taxes get affected. That is, the tax amount will be recorded into this particular account. And here it is a base 100%, 100% of tax, which means this 10% will be affected on 100% of the tax. Sorry, 100% of the base amount. And next goes to advanced option. So here it is a label on invoice, and what label it should be appear on the invoices. So it is tax of 10%, and the tax group. So tax group is basically we can differentiate the taxes in the tax report. So there might be different kind of taxes like VAT, GST, or cess. So we can classify this tax in the tax report based on the tax group. Okay, so tax group basically right now it is taxes itself. And if the tax amount will be included in the analytic account, we can enable the analytic cost, that is including analytic cost, and the company and company country will be added over here. And if the tax is included in price, you can enable the included in feature, that is you can check this box. Similarly, if the tax will be affected on the base subsequent tax, similarly that is affected on the previous tax, you can mark these two check boxes as well. So this is about percentage of tax. So let me show you what about the fixed, that is tax computation. If it is a fixed, you can add a fixed amount of tax over here. And if it is group of tax, under definition, you have to add which are that group of tax. For example, I have tax 10% plus cess 2%. So which is a group of tax. So what I have to do is that first I have to create a tax for cess, which is 2%, which is amount as 2, and I have to create a tax group for this. Okay, it is cess 2%. Okay, now let's go to our tax 10% plus cess 2%. So what I can do is that I can add those two taxes. Okay, so this is a combination of taxes. So likewise, if we have withholding taxes or retention taxes, that also can add. So in that case, if it is a deduction, what we can do is that we can add a negative over the amount. Now we'll move to journals. Basically, journals are the accounting records where different kind of transactions are recorded. So basically, Odoo will provide 5 types of taxes. 5 types of journals, which are sales, purchase, bank, cash, and miscellaneous type. So let's go to sale journal. So basically, sales journal are used to record all the transactions that are related to sales. And here we can add so the type is in sales, and can add the income account. That is a default income account that are used while we are using this particular journal. And in order to avoid or the sequence which is same, that is in order to that is categorize or change the sequence number of both sales and its credit notes, we can enable this option. That is, we want to share the same sequence number for both. Then we have to add an shortcode, that is INV. So whenever sales journal entry has generated, we can start with INV. And you can also add the currency. And for advanced settings, and here you will have to add the allowed account types and allowed accounts, so that the entry from that allowed accounts and allowed account types will only come under this particular journal. And here you can add the add schedule activity, that is you can add an activity so that whenever adding a user, okay, call this customer. So if I have added any activity over here, so customer follow-ups will be sent whenever a journal entry has been generated from this journal. And here you can add the mail server, so that whenever an email come to that particular mail, it will create a journal entry of this type. Now let's go to purchase. So the configuration of sales journal and the purchase journal are similar. The only difference is that it will add a default expense account in the purchase journal, while we have to add an income account at the sales journal. And this purchase journal is basically used to record all kind of purchase related transactions, and the shortcode is built so that all the journal entries from this journal will start with the shortcode. And next we have the bank and cash journal. So the configuration of bank and cash is almost similar. Now we'll get into bank journal. So here is a bank name, that is a journal name, bank one, and type is bank. And here we have to add the bank account and the suspense account. So the bank statement transactions will be posted on the suspense account under a final reconciliation allowing finding the right account. So at the time of that payment, if there is any difference in the amount, and if it is a loss or profit, so based on that pending amount will be posted into the profit account or loss account. And here we'll have the shortcode for this journal. And we will have the bank feeds over here. Bank feeds actually says that is how a bank statement is registered. So as I said in the introduction, that is around 20,000 plus banking institutions are supported. So the bank statements are fetched to Odoo if they are connected with Odoo. So we can use the automated bank synchronization. Otherwise, statement of formats like CMT, CSV, or FX can be used to import. And here you will have the incoming and outgoing payment option, where you can define the payment method. So under outgoing payments, here we'll have the manual and check options. So that is, while we are making a vendor payment, we can make a manual payment as well as a check payment. So this check option is available only if we have enable the checks option from the accounting configuration. And here you have to use, if you want to use the manual number for check printing, so you can decide which should be the next check number. So that can be added over here. And there will be an outstanding payment account, and at the incoming payments, there will be an outstanding received account. So these are some temporary account where unreconciled entries are recorded. And this feature was introduced from Odoo 14 version, V14, and where the incoming payments triggered from the invoice or refund will be posted to this outstanding received account. With and after reconciliation, the concerned transaction will be reconciled with the entries, and this outstanding received account will be used instead of the receivable account. So without involving the account payable or account receivable, During the reconciliation process, it will use this outstanding receipt of payment account. Okay. Next is cash journal, which have similar configuration as that of bank. And basically, this cash journal will be used to record all the cash related transaction, as well as for bank journal, it will record all the bank related, that is bank based transactions. And there is one miscellaneous type also. So all the journal entries, or that is all the accounting transactions other than the sales, purchase, bank or cash, that can be added to this miscellaneous type. For example, exchange differences or stock values, then employee salary, all this kind of things will be used under the miscellaneous type. And also we will have certain option of journal groups where we can group the journal. So what will happen is that actually it will exclude the journals. We are adding the excluded journals. So basically this journal groups are used at the time of taking reports. And I will show you on demo. Now we'll move to physical positions. So physical positions are basically for tax mapping and account mapping. Also, it helps to position the tax according to the country or country's tax policy. Suppose for my company, my products are sell at 15% tax within the country. But if I'm selling across the country, the tax might be different. So the tax has to be automatically mapped. So I have to create a physical position based on that the tax should be mapped. So under tax mapping, what I have to do is that what will be the tax on product that will be added and what should be the tax to apply. So I have to add tax 10%. And similarly, another process like local sales need to be recorded in one account. Similarly, maybe export sale may be recorded in the another account. So in that case, account mapping can be used. That actual account, what we have mentioned in the product or product category, will be mapped to the account what we need to use instead. Okay, so basically we have a product sale account, which is an income account that I have configured for my product. And if it is an export sale, the income should be recorded in the export sale. Okay, so here you can see detect automatically. So what I have mentioned, the condition over here, based on that, it will detect automatically the physical position is taken. Okay, so here I have provided as country as Belgium. So whenever a Belgian customer is purchasing or we are selling products, we are creating invoices for a Belgian customer, and the tax for product is 15%, it will automatically taken to 10%. Similarly, the income should be recorded in the export sale. And let's move to payment terms. Okay, so payment terms also define the condition to pay invoices like 30% now and balance in 60 days, etc. So this payment term can be, we can apply on the customer or vendor or quotations or invoices, etc. So basically this configuration like the payment term 30%, and the balance should be paid in 60 days. Here the description is over here. So this will be appear on the invoice. And here you can add the terms, how this should be calculated. So first is the percentage, that is as per the need, 30% should be paid now. So the value is 30% and it should be paid right now, that is immediately, that is 0 days after the invoice date. And the balance amount should be paid in 60 days after the invoice date. So similarly, you can create your own custom payment terms over here. And the thing is that in this line, the balance should be always in the last position. Okay. And next we'll move to Incoterms. So these are international commercial terms, which is actually an agreement that is a terminology used by all companies to clarify the rules and terms that buyers and sellers use in the trade. So either you can set a default Incoterm from the accounting configuration. Yeah. Yeah. Over here, you can add the default Incoterm. So if it is constant freight, and you can add. Also, you can set default terms and condition for your invoices. So while I'm enable that, a default sale terms and condition will be added to all your invoices. So I can add the terms and condition over here. And another option is the default sales tax and purchase tax. If I've not added any taxes over my product or account, the sales tax or purchase tax will be defaultly taken. And we'll have the cash rounding. So first we have to enable the cash rounding. So cash rounding help us to that is in order to round the amount into a higher amount or to a lower amount, like when payments are made in cash, like we have to, there will be some decimal value, so we have to round up or down the total amount. So we have to first enable this. And under configuration, we will have option to create cash rounding from here. Okay, there is already one rounding option, so which is 4 up, and I have added the rounding precision as 1, so it will be round to 1 in case when the total invoice value become a decimal value. And there are 2 rounding strategy, which means rounding line can be added on the invoice, that is rounded line, or second one is modified tax amount in order to round on the tax amount. And at the time of rounding, the precisioning amount, the rounding amount will be a greater value, that should be an income for the company, so that will be added into a profit account. If it is a loss, that will be added to the account. And the rounding method, it can be up, down, or half up. Up in the sense it will be rounded to upper infinity, and down will be round to lower infinity. And in case of half up, if it is the decimal value is greater than 0.5, it will be round to up, and if it is less than 0.5, that is it will be round to lower infinity. Okay. Now let's see how these things work in our invoice. So let's create an invoice. I can create the invoice from the customer menu, from invoice, or from the dashboard itself. We can create all the invoice, all the journals over here. So from customer invoices, you can also create invoices from here. So before going to create an invoice, let me explain some more things. Like from the onboarding panel, we will have a section in order to set the accounting period, start of accounts, taxes, and bank account. So let's see. So these are the first configuration. So as our first step, we have to set the localization package. So based on that, the physical position, taxes, and chart of accounts will be pre-installed. And next thing is we have to set the accounting period of our company. So let's go to configure option. And here we can add the opening date of the physical year, which is January 1st of 2022, and the physical year end is 31st of December. And here we have to add the tax return periodicity, which is monthly, annually, or quarterly, etc. And the reminder, which is 7 days after the period. And the journal should be miscellaneous, which is other than what we have discussed as, which is not a sale, purchase, or cash or bank transaction. So we have added the accounting period. So that step is completed. And the second step is we have to review the chart of accounts and we have to add the opening balance. So when I'm getting to the chart of account, what I can see is that additional column, that is opening debit and opening credit, where I can add the opening amount. For example, for my bank, I might have an asset of $10,000, and again for bank two, I have a amount of $30,000, and for my account receivable, let's add some credit amount, that is $4,500, and to payable, okay, account payable, I have added a credit of $200. So for each account, you can add this debit and credit accounts. Once you have added the amount, just go to accounting journal entries. So here you can see an opening journal entry has been created in draft option. And since it is the opening journal entry, it uses a miscellaneous operation whose shortcode start with MISC, and the accounting date. So I have to post this amount on January 1st, since I'm starting my company from January 1st. And you can find all the entries we have added to our ledgers to each account, that is to bank, bank to account payable and receivable. The amount are added over here, and here we have an additional account, that is 999 account and distributor profit or loss account. So this is one of the account provided by Odoo. Actually, this helps in order to balance the line. So which means Odoo follows the double bookkeeping entry system. So the right side and left side should be equal. So while we are entering the opening balance, this might not happen. So the adjustment amount should be automatically added to this 999 account, that is and distributor profit or loss account, whose type is current year earning, which is provided by Odoo. Now I'm posting this journal entry, that is I have added the opening journal. So in my balance sheet, okay, this is posted right now. So in the balance sheet, let me check again. Okay, this has been posted on 2021. So in the balance sheet, I can filter based on 2021, January 1st. So at that time, because already that physical year has been completed, so I've by mistaken added to 2021. So I can also add it to 2022. So for this one, I can reverse the entry. Okay. Or I can just cancel that entry. And what I can do is I can manually create opening entry again for this physical year, that is 2022. For bank, I have an amount of 10,000, and for bank 2, there is like a 30,000 amount. So it is not balanced. If I need to post it, I have to choose the 999 account. So that amount will be added over here. So what I have to do is that I have to just mention this entry is an balancing line. And then I can post it. Mhm. Okay. So I can choose the journal all. So what I can see is that the amount that I have added to my account, it is to bank 1 and bank 2, which is the opening journal, and the receivable amount is not there. This is as per 2022. If I'm checking 2021, I can view all that details as well. And I can also compare this with previous period or same period the last year as well. Okay, so previous period, using that I can compare the data. So before getting to it, let me show you one more thing. So here you will have yeah, the total unallocated earning is 40,000, which means the balancing line, that is 40,000, that is a 999 account that will be added as unallocated earning. So, and at the end of the fiscal year, that is while we are closing the fiscal year, we'll transfer this unallocated earning to retained earning. Okay, so we have added the opening balance as well. And the next step is setting the default taxes. So we have already set in the configuration the default taxes, and you can add the bank account. So as I said, there are a lot of banks that are integrated with Odoo and United States as well as worldwide, or also you can create a new bank from here. For example, and you can add the bank and identifier code. Okay, so the journal is bank 1. So when I'm creating this, you can find the bank journal name will be changed. to that. Okay. So all the basic things are configured. Now you can see the bank one journal is named as a bank account number. And here you can find the balance in the ledger. And also for bank two, the balance amount you can find over here. Now let's create a customer invoice. We'll move to the basic operations. Okay, let's go to invoice. So I'm creating one invoice. So where you can add the customer, the example Deferred, and here you can add the invoicing date, the date at which the invoice is creating, and the due date, which is the payment term. We have already configured one of the payment term like 30 days now and remaining the balance in 60 days. So we can add that payment term over here. And the journal that is automatically taken as a sales journal. The sales related transactions will be added to the sales journal. So customer invoice is automatically taken, and since the company currency is USD, by default that currency is taken. Okay. We'll also provide multi currency scenarios as well. We'll discuss it later. And next, under invoice lines, we can add the product that we are going to invoice. So which is one of the product is acoustic block screen. And here you can find the account is taken as product sales by default, which is the income account, and the quantity and the sales price, the tax we have added, that is inside the product, we can add the tax. So that customer tax will be taken. So before confirming, let's go to our product, acoustic block screen. Okay, so here, okay, so in this case, tax is not added. So it will take the default tax we are provided in the configuration settings. Let me add the tax over here, that is tax 15%. Okay, so the sales price is over here, and under the accounting tab we can see the income account and expense account field, or we can add the income account. So income account can be added either at in the product accounting tab. If the income accounts are not specified there, you can also specify under the product category. So here it is added as product sales account as income account, and the expense account as expenses. So if the account is not added in the product, it will take the income account from the product category. Okay. Now we'll move to our invoices back. So for the credit, we have created when we have added one invoice, and the product is acoustic block screen. And here you have additional option to add discounts. You can also add analytic account and analytic tab, which we'll discuss later. And also we'll have option to add sections. So sections can be added like electronics. Okay, I can add this, the product under this, and also I can add a office lamp, and again I can add one more section like furnitures, and add some products over here. This is office chair. Okay, so over here you can find the untaxed amount, untaxed total amount, and the amount total tax, and the total amount, that is including the tax amount. And in the sale order line, you can find the subtotal will be taken as a tax excluded. Okay. Now I'm confirming. So when I'm taking the customer preview, we can find the subtotal of each section over here. So the customer can view the subtotals of each section. Go to edit mode. Okay. Now the next step is either you can send this to your customer, that is the invoice can be sent to a customer, and you can find that the recipient will be auto populated over here because in the customer contact we have added the email ID, so that will be automatically taken. And the conditions, that is the content we have to add over here. This is a generator under using this particular template. You can also edit the template, and here you can find the invoices attached as PDF. Now send and print. So it will be sent to the customer. So this is the document layout of our invoice. So what I can do is that I can configure if needed. So this layout is light. I can also mark it as boxed or bold or striped as well. So I'm using the normal one. Okay. So the paper formats, company tagline details, the background things can also be added. Okay, so right now the things are sent to the customer. So behind the chat, below the chat, you can find all the things, that is all the history that we have done from the invoice creation to sending the invoice to customer. So we can see that activity has been scheduled, that is called the customer, that we have been added in the journal. Once a journal entry has been created, and follow-up action, schedule action, follow-up, as a follow-up, an activity has to be scheduled, so that will be automatically added over here. So what I can do is that if after I'm calling the customer, I can mark it as done and add the feedback as well. And the customer can make payment. So after making the payment, here it is the journal, the bank journal or cash journal. You can choose the journal over here. So I'm choosing the first bank, and the amount, the recipient bank account is over here, and the amount, currency, payment date, and memo, that is the invoice number. Okay, then create payment. So right now the invoice will be in payment stage. So the customer had made some payment. Later, sometimes the customer can return the product as well. So after returning the product, we have to make that is a refund. That is, we have to refund. So that we can do either through credit note from the invoice itself, or from customer and then from credit notes. So I just need to reverse the amount, that is, if customer has been returned this acoustic block screen, I have to reverse that amount. So I have to add the reason, like it is damaged. So the reason I can add over here, and I'm reversing. So what will happen is that a credit note is generated, and you can find that the reason over here, and it is the reference, that is the reversal of this particular invoice and the reason. So let's go to credit note. So you can find that credit note is generated over here. Not this one. Okay, a draft credit note is generated. So I only remove the acoustic block screen, so I can remove this. So I'm just reversing the amount, that is only this product is written. So I'm just reversing this product only and make the payment to customer. Okay. So under journal items, you can find the journal and that is a ledger posting. And here the customer reference, you can find the reversal of this particular invoice and the reason is updated over here. And now let's go to customers. Let me show you how the physical position works that we have created. So for this customer, John, you can find his country is Belgium. So as per the physical position, the rule we said, whenever this customer is making a sale from company, that physical position should be automatically taken. Okay, so again from invoices, I'm making an invoice to John, who is from Belgium, and I'm choosing the acoustic block screen, whose product customer tax will be 15%. So when I'm added over here, you can find the tax is taken as 10%, and here the account is moved to taken as export sale. And in the other info, you can find the default Incoterm is added and the physical position is automatically taken over here. And next is cash rounding. So here, for example, let me add the price as 295.7. So which is a decimal value. And if I'm adding the cash rounding, that is round to up, you can find a line has been added in order to make the this 70 to 1, that is it rounded to 296. So that amount you can see over here, and here you can find the account which is a gain which we are rounding up, so that amount will be an income to company, so it will be moved to that particular account. So this is how cash rounding and physical positions are work. And the next thing I would like to explain is regarding the journal items, that is the ledger posting. So let's start as a fresh. Okay, I have one invoice over here. Okay, so when I'm creating an invoice, under the journal item, I can find which all the accounts are getting affected during this invoice creation process. So this is an after sale process. So at the time of invoice creation, there will be an income generator, which is the product sale account. So as income increases, the account is credited. And the next account is the account receivable. So account receivable keeps the payment that we have to receive from our customer. So as account receivable is an asset account, as asset increases, it will be debited. And the tax receipt account, which is a liability. So the taxes increases, it will be credited. And I'm confirming this. Okay. The next process is registering payment. So while we are making a payment, a journal entry in this bank journal that have been created. So in the customer payment, we can find a payment has been generated for deco with this total amount. Okay, so inside this, that is the total amounts inside the journal entry, you can find the amount will be moved to account receivable to outstanding. So basically right now that invoice has been paid. So you can find the status will be in payment. That is, right now the amount from account receivable is transferred to outstanding receipt account. That I have already told you. Like there are some default accounts we have used, and the accounting configuration you can find under the default section, default account section. Yeah, here you can find the accounts, that is the outstanding receipts and outstanding payment. So at the time of reconciliation, Odoo will not include the account receivable or account payable for reconciliation process. Instead of that, that payment will be just transferred to either of this. That is, in case of an incoming outgoing payment like uh, vendor bill, that amount will be moved from account payable to outstanding payment. Similarly, in case of invoices, the amount will be transferred. That is, account receivable amount will be transferred to outstanding receipt account. And only after reconciliation process, it will be moved to bank account. So in the over here you can find the outstanding payments, just 295. So sorry, let's go to over here. Yeah, here you can have two payments that have to be reconciled with bank. So let's do for this one, that is amount of 169.05. So let me create one bank statement from over here. It is bank #21st. So what I can do is that this is a bank journal, and I can add a label over here. Invoice of 169.05 dollars, and the partner is Deferred. I can add the amount over here. So the label is a mandatory one. So while the time of reconciliation, the amount will be shown in the reference of label. So you can find the computed balance as over here. So let me add the ending balance to 0.92. Now I'm saving and posting. Okay, before posting, let me show you one more journal entry. So right now I'm just created an statement. So in the journal entries, you can find the two accounts are affected. That is a bank suspense account. That's what I have just explained, that this bank statement transaction will be posted into the suspense account, and only after reconciliation process, the bank and account receivable are getting matched. Now I'm posting this. So the statement is posted and reconciling. So it is right now they are reconciled. Now from the invoices, you can find that is already paid. Now let's go to the customer payment. Over here, you can find the journal entry. So where you can find the amount will be transferred, and in the statements, I can view the statements. So this one. So after reconciliation, I can find the journal entry as the amount is first moved from and the account receivable to outstanding receipt at the time of payment, and after reconciliation, that from that outstanding receipt, the amount is moved to your bank account. So this is the ledger posting of customer invoice. Similarly, the vendor ledger posting also you can check. And now we will go to the vendor bill. So basically from here we can create the vendor bill, and we have an upload option over here. This is for bill digitalization. So that is Odoo support the bill digitalization process. That is, we can scan the PDF. Scan PDF can be uploaded to a system, but it is an IAP service, so we have to purchase some other credits from Odoo so that all the data can be fetched to the bill from the document, from the scanned document. So let's edit this. So here we can find a vendor is added to whom I have to make payment, and the bill date and accounting date. Bill date in the sense the date at which the bill is created, and accounting date means at what date the entry will be visible in the accounting reports. So the bill date of creation is 24th, and the accounting date, the entry should be affected in the reports on 26th. And here we'll add the bill reference and payment reference and the recipient bank. And also what I can do is that I can add the bill that has previously created, so that all the product lines or invoice lines in that bill will be automatically added to this one. Now similarly, as in the ledger posting of invoice, here you can find the ledger posting of a bill. So account payable means that is the amount we have to make payment of vendor. That is, the company have to make payment for vendor, and the expense is the expense generator from that purchase. So as account payable is liability, and as liability increases, the account should be credited, and expense, which is of nature expense, and which is debited, and similarly the tax paid is also debited. And in the other info, we will have to add the Incoterm physical position that we can apply on the vendor bill as well, and the cash rounding also we can use. And we will have an option post automatically and to check. This two feature will also available in the invoice as well. Post automatically means when I'm check this post automatically, what will happen is that this bill will be posted on the accounting date. That will be automatically posted on 26th of March. We no need to manually post it. And to check means, suppose one of the cashier is creating a bill, and if he is not sure about the things he has added in the bill, he can mark it as check to check, so that an higher official can check the quotation and he can correct it. So what will happen is, when I'm enabling to check, here you will have an additional button that is set as check, and I'm saving. So right now this bill is so right now this is posted and it have to be checked. So similarly, I can have one more bill for Azure who have the accounting data and bill data today, and I can add a product. Okay, so right now I have two bills. So what an chief accountant or accountant can do is that he can filter the bills, that is to check. So he can find those one need to be checked, and he can check all the things, and once it is all set, he can mark it as set as check. So from the other info, it will be automatically disabled. Okay, so this can be used with the option to check. Now we'll move to follow-up reports. So sometimes in sales firms, customers will pay the amount at right time, but still there are some customers keep delaying. So what you have to do is that we have to follow up them in order to maintain the cash flow. So follow-up report has to be sent to them periodically. So in order to generate follow-up report, we have to create different follow-up levels and different follow-up actions. So as first follow-up action, what I have configured is that after 15 days of overdue, an email should be sent to a customer. Similarly, a letter has to be printed. Also, we can mark SMS so that SMS will be sent to the customer. And also I can add a manual action. So when I'm adding the manual action, I can view what is the manual action that I have to be added over here, that I can add it over here. So arrange a call to customer. And this is a mail template since I'm unable to send an email. So the mail has to be sent to them with this template. And what the mail should contain, which means that is whether it requires only the due invoices or it may join all the open invoices that we can add over here. So let me say this. And similarly, I can also set the second reminder. So after 20 days of due, I can again send an email and print letter to a customer as a second follow-up action. Similarly, different follow-up actions can be added over here. So let me show you. That is, suppose I'm creating one of my invoice, and the invoice status, for example, 1st of March, and I'm providing the due date as immediate payment. Okay, I'm adding one of the product. So there is 150 rupees he need to pay plus 15% tax. So total of 161. I'm confirming. Now I'm going to the list view. So you can find this is 24 days ago, which means it is already in due, and the activities automatically added over here for follow-up. When I'm going to the follow-up report, I can find one customer invoice who need some action to follow up. So which is assumed a total due of 161, which is overdue. So what I can do is that the person who is responsible for this can send mail from here. So this is a manual process. If you add, that is in the follow-up level, if you check the auto execute option, this action will be automatically done. So let me go to follow-up report. So I'm just printing the letter and arrange a call to customer, and it is done. And I'm send the email. It's also done. And also I'm printing the letter. Okay. So here the follow-up report you can find, and inside it you can find the due amount only. In the follow-up action, if you are provided open join invoice, that is join open invoices, all other open invoices will be sent in the reminder mail, that is in the letter as well as in the next. Okay, so here you can find that next reminder is in 30th of March. That is, it will be due after the second follow-up action will be due after 20 days. So after 5 days, the second action will be has to be done. So in the follow-up report, I'm just removed in need of action. So here you can find for this customer, the second reminder email and letter that will be scheduled to the next reminder day, that is after 20 due days. Okay. Let's move to multi-currency scenario. Okay, so Odoo supports multi-currency. So under the currencies, we can find all the currencies, and these are the active currency. You can filter it by active currency. And so basically the company currency is United States dollar. Since I'm using the localization package as United States and the configuration settings, you can find the United States as the physical country and the main currency of your company is USD. Okay. And you will also have the provision to automate the currency rate. So when the Odoo is connected with any one of the service provider over here, and we have added the interval as daily or weekly, so on that basis the currency rate will be automatically updated, which is provided by this service provider. And under default accounts, here you can find the post exchange difference entries, which means that is, even though the currency rates are different at different dates, sometimes the customer, we have created the invoice for customer by today, and he may have a payment term of 30 or 60 days. So after a long time, he may make the payment. So the currency rate may vary. So we have to manage that currency exchange difference. So the journal will be used as exchange difference, which is an miscellaneous journal. And from that currency exchange, that difference will be a loss or gain. So based on that, it will be posted to this accounts. If it is a gain, it will be added to the exchange difference account, or to the foreign exchange currency loss account or gain account. Now let's move to currencies. So I have a currency that is INR, whose value is 76 by 25th. Let me add 1 by 23rd. So if 23rd, suppose the rate is 74, and the customer is making payment at 25th of or after 25th, the currency may vary. That is, it's from a change from 74 to 76. So that difference will be recorded. So now I'm going to invoices, and I'm making an invoice on 23rd for the credit, and the due date is 30 days, and currency in INR, and I'm adding a product. So yeah, corner test right it. So here you can find the pricing INR, the tax and INR. So similarly, if I'm choosing one of my tax, that is tax 10% plus cess 2%, you can find the taxes, that is 10% and cess both are separately. And I'm posting this. Sometimes the customer is making a later date. So suppose customer is making by 25th. Okay, so the customer, there will be an exchange difference. So you can find that exchange difference in the journal entries. So with the miscellaneous journal, group by journal, so I can see entry in the exchange difference where you can find the difference of that amount. And the ledger posting, that is against the account receivable, there will be an exchange difference loss, which means the exchange difference created loss for the company. So that will be recorded in the loss account. Now from the invoice, so as I've created the invoice in INR, I can also find the amount in both in dollar value as well as in the currency amount. Similarly, when I'm checking the sales journal, I can also found the amount in currency, that is over here, which is the amount in currency in INR, and the other things, the dollar value also visible over here. You can find the tax applied. Okay, so I hope this much portion is clear. Now let's move how a cash is transferred from a different bank account. So in the accounting configuration under the default account section, we will have one more account, that is the internal transfer account, which is a liquidity transfer account. So this account is an intermediate account in order to transfer the cash between two banks. So what I can do is that I have two banks over here, and I can create an internal transfer from here. Let's create an internal transfer. So this is a payment type is send option, that is from bank 1 I am sending to bank 2. So I'm sending an amount of $250 to the second bank, and let me confirm this. Okay, so in the journal entry you can find that the outstanding payments and liquidity transfer, that is the money is transferred from bank, that is it is taken from the outstanding payments to liquidity transfer. So in the dashboard at the second bank, you can find one internal transfer is automatically created over here, which is a receive money, that is from the destination journalist first bank, whose journal entry you can find that is from liquidity transfer, the amount should be moved to outstanding receipt. Okay, now let's create the bank statements for the operation. Sorry. I can create one. I have provided a reference, that is I'm transferred bank 1 to bank 2, which is the statement I have created, and sent money to bank 2. Sorry. So which is $250. Since we are sending them, the amount will be negative. it is minus $250, and the ending balance should be 98,063.92. I'm posting this and reconcile that entry. So this is where you can find that the label I have added in the statement. So let's validate this. Now let's move to the journal entry where you can find the payment is between the bank and outstanding payment. Similarly, at the second end, at the time of reconciliation, let's go to statement at the bank from bank 1 to bank 2. Okay, received money, that is this bankers received money, $250. Okay, so the ending balance should be 250. And here you can find the statement, ledger posting, and let's post this and reconcile. Okay, so the receive money is reconciled again with the statement. Now let's move to this. Okay, validate. So here you can find that from the outstanding receipt, it will be moved to bank. So the process is like that. From bank 1, it will be moved to outstanding payments, and from outstanding payments to outstanding receipt, and outstanding receipt to bank 2. So in the ledger, under reporting, under general ledger report, when you unfold the bank 1 and bank 2, yeah, here you can find the amount is credited in bank 1, and in the bank 2 the amount is debited. Okay, so this is how the amount can be transferred between two banks. Now we'll move to analytic accounting. So actually it analyzes a single account, or can be filter it with without publishing the journal entry. Similarly, we'll have the analytic tag, which allows the journal entries or manage the analytic distribution. So after enabling this two feature, you can find the analytic account creation, account group creation, tags creation, and default rule creation. So let's go to the accounting groups first. So here you can find some accounts, and the analytic accounts. You can create analytic account from here, and you can group it by their groups, that is analytic account group. So under the project group, we'll have this much analytic account. So you will have a categorization of analytic account using this. And also you will have analytic tags. So inside the tag, you can add the analytic distribution. That is, you can transfer this much percentage to one account, and this much percentage to next account, that you can add over here. So you can define the analytic account to which how much percentage has to be distributed, that you can add over here. And next is default rules, that we'll discuss later along with the automatic transfer. So let me show you. Let's go to analytic accounting. let's create one account like service. Okay. I can add this under internal. And if I'm making any invoice or I'm receiving any service from the customer, what I can do is that I can use that analytic account. For example, if I have a warranty service or warranty, okay, a warranty service product. So what I can do is that I can add the service account, and I'm adding the price is 100. So what will happen is that the value of this, that is the income, that the distribution will go to that particular analytic account. So in the analytic account, when I'm searching as services, I can find that the amount will be added as a credit in this. And let's take another example of tax, that is analytic distribution. Okay, so if I'm using this tag, what I can do is that I can add 20% of the amount to this particular analytic account, and remaining amount to, for example, I have one more account, service 2. I can add the remaining 80%, or I can I want to find how much percentage amount in that particular account, that the distribution I can add over here. So at the time of making invoices, so right now this is in draft state. So let me add the analytic tag over here, that is contract. I'm saving. Now register the payment. So when I'm coming to my two analytic accounts, that is service 1 and 2, I have two account. The 80% will be added to service 2, and the remaining amount, that is 20%, is added to here. So here you can find the things over here. Now before going to default rule, let's see the automatic transfer. So this is to transfer amounts, the amount from one account to another in a periodic manner. For example, I have an like stakeholder share. Okay, so between this period, that is from example to June 31st, January to July, I want to send monthly, for example, from the bank account, the total amount of bank account at 20% to one partner's account and 30% to another partner account. So that we can set over here. So the bank origin account is added over here, and I have two destination account where I can add, that is 10% to partner account A, and 20% has to be sent to partner B. So let's choose journal. Now I'm saving and activate. So what will happen is that when I'm looking to the transfer, uh, compute the transfer. Okay, so here you can find the first journal. Over here, you can find from the bank 30% is taken and 10% is moved to account A and 20% is moved to account B. So these things we can also automate with the analytic account rules. So let's get that and disable this. Okay, so what I'm doing is that from the default rules, I can set a rule for account 1. Okay. Account should be okay. So whenever an amount or a transaction is affected at this particular account, it should be automatically record in this particular analytic account. Likewise, we can add the condition over here. So when I have added an automated transfer to account A, that is for partner 1. So I'm setting this rule, and for automatic transfer, I'm creating new transfer with channel miscellaneous and till July 31st from bank account to partner A's account with 30% only. So I'm saving and activating this and computing the transfer. So here you can find a transfer that is 30% is deducted and it will be moved to that is it will be shown in the partner A's account. I'm posting this. So in the analytic account stakeholder 1, we can find that 30% will be added to this particular account. Similarly, we can set default rule for our sale as well, like whenever a partner make a sale order or invoice to that is an internal user making a payment to a user, that should be affected in some other account. So that's also we can set, for example, and a partner to for this account. If if Michelle made an invoice for partner Azure for product large cabinet, that should be get affected, and that will be recorded entry in the this particular analytic account. So let's create an invoice for Azure with product large cabinet. So here you can find automatically that analytic account is taken. So this can be done using the default analytic rules. Now we will move to budget management. So from the settings, we can enable the budget management. Okay. So using the proper budget management, the company can concentrating on improving company's profit and cash flow. So from accounting, then go to budgets. Here you can find the two existing budgets. Let me create one, that is budget of 2022 March, and the period is 1st of March to 31st of March. And here can add the budgetary position. So budgetary position, in the sense, inside this budgetary position we'll list all the accounts which are intended to be keep the budgets. So we'll have we can create a budgetary position as income, and let's create an edit. So here I can add all the income accounts. So let's choose by income. Selected all the income account. Okay. So the start and end date will be added according to the period what we have given, and we can add a planned date over here. That is, I'm planning for an amount of $10,000. So next is a practical amount. So plan amount means the amount that we are planning for the budget, and the practical amount, in the sense the amount that we are really want to earn or spend. And theoretical amount means the amount that we supposed to spend or earn till this period, till now, that is by from 1st to 25th of March. So I'm going to say this. I can also create budgetary position from, under configuration. I can create one more budgetary position, which is cost. I'm filter by expenses and chosen all expenses. Okay. Again, I can add that in the budget. Let's edit this and add a line, the budgetary position. Cost, and also I can add the amount which is $100. I'm saving this. So over here I can find the practical amount, that is I have earned income of $943 and I'm planning to reach this, and the theoretical amount, that is as per the amount from 1st to March 25th, how much I should earn is the amount is 8,064. And here you can find the achievement, that is the ratio between the practical amount and theoretical amount. Similarly, the cost I have planned is 1,000, but actually the expense is already 300. So the expense is greater than what we have planned. And here you can find the achievement. So based on this achievement, we can define whether this budget need to be continue or not. So how this practical amount is added over here, in the sense, when we are making an income, that will be added into the practical as a practical amount. That is, while we are creating an invoice, the income account that is defined inside the budgetary position will get affected. So according to that, that amount will be incremented over. Similarly, course we have chosen all the expense account under this budgetary position. So whenever a bill is generated, basically the expense is created. So that will be added over here. Okay. And next is asset management. So using the asset management, we can manage and organize and monitor the asset management. So as I have one asset here, which is computer, and the original value is added over here, and the acquisition date and the not depreciable date, which is the salvage value of the asset computer. So the not depreciable value is 5,000. Then the depreciation will be calculated over the remaining amount. That is a depreciable amount. So the depreciable value is 5,000, and the book value is the sum of the non-depreciable and the depreciable value. And there are three types of depreciation method, which is first one is straight line, and declining and declining, then straight line. So when it comes to straight line, while I'm computing, what it will happen is that it will divide the depreciable value equally into 5 years. That is 5 periods. That is duration is 5. So adding over here, that is an account of asset. Okay, it should be a fixed asset. And depreciation account, and okay, so this is account of fixed asset. And in order to automate the asset, what we can do is that we will have an option to automate the asset, whether we need to create in draft, the asset need to be created in draft, or whether we need to create draft and validate, that we can add over here. And the depreciation amount will be added to this depreciation account, and expense will be recorded to the expense account, and the journal is a miscellaneous journal. Here you can find an existing depreciation schedule, which means while we are migrating the software from one ERP to another, there might be some asset depreciation that are already recognized in the previous system. So the remaining should be only calculated in Odoo. So for that, we can add the depreciated amount in the previous system, and the existing depreciation and the first depreciation date. So based on that, the remaining depreciation will be calculated. So let's see the computation. So while I'm computing, let's click on compute depreciation. I can find the depreciation board over here. For each year, 1,000 will be depreciated. And if it is declining, it will multiply with some factor, some depreciation factor. And I'm computing depreciation for declining. So here you can find the depreciation, that is, first it will multiply the 5,000 with 0.30, that is 30% of 5,000 will be the first depreciable value. So which is the, that will be the depreciation, and the remaining depreciable value will be the total depreciable value minus the depreciation. And again for the next year, the depreciation will be calculated from this depreciable value, that is 30% of 3,500. Similarly, for each year, it will go like that. And for third option, that is declining, then straight line. So first it will start as declining, and once it comes below the straight line, that is once the depreciable value made below the depreciable value, it will go by straight line. Okay. So let me, okay, so over here for the first 2 years, the depreciation is calculated by a declining factor, and for the third year, once that is once I have calculated the depreciation, that is 30% of 2,450, it will goes below the straight line method. That is a value that has to be recognized in each year in straight line. So from that date onwards, it will taken as a straight line. So this is about the asset management. Now we'll move to deferred expenses and deferred revenue. So basically, the deferred revenue are the advance payment created by the customer for some services that are not yet to be rendered. So they are liability to company since company still owes the customer. So let me edit this. Okay, when we have an warranty service whose original value is 1200, and here you can find the residual amount to recognize, that is the total value itself, that is the deferred revenue itself. And here you can add the deferred account. Okay, deferred revenue. So this will be the type of current liability, even though it is a revenue. Sorry, this should be income account. This is an income account. Deferred revenue should be current liability. Okay, so this is for 12 months, and the first recognition date is over here. So it is from 1st of March. Okay, so I can compute the revenue over here. So I can see the revenue board for 12 months. Similarly, we will have the deferred revenue. There are prepayments that the company made to vendor for some service. So let's check with automation for deferred expense model. So I have an expense model that is making payment an annual rent for 11 months, and the deferred expense account can be added over here. The deferred expense should be the current asset, which means we have already payment, even though it is an expense for the company. The service is not received till yet, so it's an asset for company, and the expense is into render account. And now in the deferred expense account, we can automate. So it should be in create and validate, and the expense model can be added over here. Okay, so when I'm making a payment to vendor, so when I'm creating a bill for one of the vendor, that is which is an rent amount for next 11 months, and what I can use is that I can use the deferred expense account, and the total rental amount is 11,000. So on confirming, let me add the bill rate. So on confirming, you can find a deferred expenses created over here, and you can find it is in running stage, and the depreciation board is over here. So I'm just posting this. What I can do is that you can find the posted entries here. Right now it is all are in draft, and the first journal entry should be posted on this particular day. So you can find this will be automatically posted on the accounting day. But what I can do is that I can just remove post automatically, and I can make it to post by today itself. Okay. So the journal items you can find the deferred expense and rent, that is the expense account is affected. So this will be, you can find in the profit and loss report. In the profit and loss report. Okay, under expenses by this month. Let me go to deferred expense. Okay. Yeah. Sorry, the deferred expense should be in balance sheet. That is, it is an asset. So all the asset types should be asset, liability, and equity things will be under in the balance sheet, and the expense type, income, are under the P&L report. So it should be under current asset. So you can find the deferred expense over here. And so this is about the deferred expense and deferred income that we can create either manually or automate. Now to the reporting side. Okay, so basic reportings like profit and loss report. Let's move to, so the income statement or profit or loss report you can find over here, and you can take comparison report our previous period or the same period last year, etc. And the operating income, so you will have the equation how this operating income is calculated. When you click over here, you can find the equation for that. And here you can find the cost of revenue, since cost of revenue is the expense type, but the company's actual income is recognized by the company's income deducted by the direct expenses. So the direct expenses will be recorded as a cost of revenue. And we can find the total income and gross income and expenses over here. And the difference, you can find the net profit. Then we'll go to balance sheet, where you can find the asset, liability, and equity details. And the executive summary. So here you can find the entire data like cash received, surplus, how many spent, the closing balance, company's profitability details, the balance sheet details, performance, company position. All these things can be fetched from the executive summary. And then we will have the cash flow statement. The cash in, cash out details will be added over here. That is how many advance payment received from the customer, and the cash received from operating activities that can be updated over here. Then we will have the partner ledger, or the payables and the receivables of partner ledger can be seen over here. And I can also take either by receivables or payables. Then we'll have the aged payable and aged receivable, which means the aged payables, those payments that are due in 1 to 30 days or 31 to 60 days. So that we can find over here. So for Azure Interior, $161 is due in between 1 to 30 days. So this 1 to 30, 31 to 60 days, these are come over here based on the payment terms we provided. Then similarly, we will have aged payable, that is the amount that we have to pay which are to the company which are already due. And the general ledger report, which we can found all the journal entries into each of the ledgers in the company in debit and credit and the balances. And we will have the trial balance. So we'll get the initial balance of the accounting period. So this is for March debit and credit amount and the ending balance. We'll have the comparison report, and we can make use of the miscellaneous journal group over here. So let me remove this. So it will find all the amount taken, the records of all journals. So you can find the initial balance and the debit and credit of the March 2022 and the ending balance over here. Also, the PDF and XLS format can be, the report can be downloaded. Then we will have the consolidated journals, also the depreciation schedule. So as the depreciation we have calculated from asset, that depreciation get affected over here. It is a depreciation report can be taken over here. Similarly, the budget analysis. Okay, so the budget analysis, planned amount, practical amount, theoretical amount, and the achievement can be viewed from here. So these are the legal statement, basic legal statement provided by standard US GAAP. So we have covered some parts of accounting module. So accounting module is so vast. Actually, even though the process might be different for each scenario. So what we can do is that we can make use of the existing feature to complete our entire process. So I hope you get an overview about the accounting module and basic things. And thank you for attending the session. Have a great day.